Can you hear me now? Can you hear me? Can you hear me? Good morning, everyone. So we're about to start our seminar for today. So fellow Realtors and Realtor Associates, good morning again. On behalf of the Education Committee of the REALTORS Association of Jamaica, I welcome you to this, our annual tax seminar workshop, which is being done this year virtually due to COVID-19. I acknowledge and welcome our President, Mr. Donovan Reed, members of the RAJ board, and our keynote presenters, Ms. Jeneva Allen from the TAJ, Ms. Atasha Bernard, who is a chartered accountant and the owner of her own business, Abidjan Consultancy, Mr. Donovan Walker, attorney at law from Hart, Mirad and Fatto. Again, we welcome you all and look forward to a very great and memorable presentation. At this point, we will ask Mr. Nevin Nish to bring us the prayer, followed by our president who will bring us greeting. So Nevin.
Morning, fellow realtors and panelists and invited guests. Today marks a very important day in our lives as education. We always said we should be students of learning. And as I thought to pray today, I had to draw again for the Salesman prayer that Ogmandino wrote in his book, The Greatest Salesman Who Ever Lived. It goes as such. I'll pray, but my cries for help will only be cries for guidance. Never will I pray for the material things of the world. I will pray as a salesman in this manner. O Creator of all things, help me. For this day I go out in the world naked and alone. And without your hand to guide me, I will wander far from the path which leads to success and happiness. I ask not for gold or garments, or even opportunities equal to my ability. Instead, guide me so that I may acquire ability equal to my opportunities. Help me to remain humble through obstacles and failures, yet hide not from mine eyes the prize that will come with victory. Spare me sufficient days to reach my goals, yet help me to live this day as though it may be my last. Guide me in my words that they may bear fruit, yet silence me from gossip that none be aligned. Discipline me in the habit of trying and trying again, yet show me the way to make use of the law of averages. Favor me with alertness to recognize opportunity. Bathe me in good habits, that the bad ones may drown. Suffer me to know that all things shall pass, yet help me to count my blessings of today. But all these things be only if thy will. I am a small and lonely grape clutching the vine, yet thou hast made me different from all others. Guide me, help me, show me the way. Let me become all you planned for me when my seed was planted and selected by you to sprout in the vineyard of the world. Help this humble salesman. Guide me, O God. May this prayer be ours for today and forever. Amen.
Ladies and gentlemen, are you hearing me?
Yes, we're able to hear.
Thank you. Thank you very much. Moderator, Director Lati Sterling, our esteemed presenters, fellow realtors all. It's my pleasure to bring greetings on behalf of the board and staff of the RAJ to you all at this our first seminar for 2021. It is our responsibility to serve our members, and we see it as a duty to ensure that everyone, especially those members who are independent contractors, that they are given the tools to enable them to be tax compliant. We are mindful that non-compliance can affect one's ability to practice and to earn as a realtor. In that vein, we have crafted this seminar with the kind of presenters who have the expertise and the know-how to assist us all to be able to file our taxes or to get them filed and to answer any concerns and questions we may have. We are trying to get this seminar accredited for CPD points, and we have even paid the requisite fees to apply for that status for this session. While we have not gotten the approval as yet, we will endeavor to ensure that sessions of this nature get the accreditation that they deserve. Ladies and gentlemen, sit back, learn and enjoy from this tax seminar, and stay safe, you and your families, especially at this time. I thank you.
Morning again, RJ family members. This seminar will be a very informative. It's going to be a very informative seminar, and I hope you'll find it useful. So we have some very esteemed presenters here today, and we'll try to make it as efficient as possible. So first and foremost, worldwide, there are two certainties of life. Can I get some responses as to what are the certainties of life? Any respondents? Sorry about that. Having some feedback here. Family members? Okay, all right then. The feedback, we were getting some feedback just now. Now we can go ahead. So I'm seeing that some persons have been typing into the chat. Yes, it's actually death and taxes. But in Jamaica, we have added a third. Does anyone know about the third certainties of life in Jamaica? Everybody should know that. The third certainty of life in Jamaica. Yes, so we said death and taxes, that is worldwide known. But what is the third?
Death and taxes worldwide. What is the third?
In Jamaica.
Corona.
No, all right. Well, I won't. I don't say any responses. So I will. That will be food for thought. You can.
Right.
That will be food for thought. You can have some more discussions on that. So taxes. So it makes no sense we stick our heads in the sand and pretend as if it will go away. So it's here with us. So we're gonna have some discussions here to see how best we can plan for taxes, and effective tax planning will result in financial gains as well and can improve your business. There's a chartered accountant here. She is this is Miss Atasha Bernard. I hope that she'll go into some of the benefits of effective tax planning. So I will go to the first presenter here. Well, Mrs. Rebecca Toller, she will be introducing Miss Jeneva Allen. Thank you very much.
Good morning, everyone. As part of the tax reform program, Tax Administration Jamaica has restructured its delivery of taxpayer education services. This resulted in the establishment of a taxpayer education unit in April of 2012, whose motto is empowerment through education. Tax Administration Jamaica has installed taxpayer education officers and managers in each of its 4 revenue service centers island-wide. The mandate of the Taxpayer Education Unit is to educate the public on tax compliance with an aim of improving the level of voluntary tax compliance among Jamaicans. In executing this mandate, the Taxpayer Education Unit conducts the following functions: the School Taxpayer Education Program, STEP, advisory visits, the Special Taxpayer Assistance Program, STAP, seminars like ours today, expositions. They also offer consultations with new businesses. They operate an e-filing center and provide one-on-one demonstrations on the e-service system. Our presenter today, Ms. Jeneva Allen, is a graduate of the University of the West Indies. She has over 23 years of experience in tax administration and has been a member of the tax education team since its inception. She holds a Bachelor's of Science degree in Psychology and Human Resource Management. Please join me in welcoming Ms. Allen to our seminar today.
Thank you so much. Thank you so very much. No, where I am at, there's some internet issues. So I am actually doing the session from my personal cell phone. I don't know how the view is or how the sound is, because this just now we have had to just reshuffle, and I don't really know how to do it so well from my phone. So I'm asking you please to bear with me, and so let me know if you're able to hear me clearly.
We are able to hear you clearly. The attendees can't respond via chat, but we are able to see and hear you clearly.
All right. Okay. Wonderful. Okay. So I'm really happy to be a part of this seminar today. Why? Because I love helping people, and I know that the realtors at this tax time where their personal income tax return is required, I know that this is usually a very challenging time for the realtors, right? And so I'm really happy to be here to share briefly, because I was told I only have 15 minutes to share briefly with you on how it is that you get off a footing in the right way, and see how best as possible I can help you in submitting a and effect a correct income tax return. So I'm going to be trying now to share my screen with you. Come and help me, please. Right. Presentation. Oh, I don't know. It's on the screen. Is it sharing the screen? Oh God. It was in the email. No. Just a minute, please. I'm trying to locate the document on the phone. Please bear with me.
Miss Allen, probably you could email it to someone and let them share it for you.
Okay, you're seeing it now?
No, it's not sharing.
Save it to share.
Yeah, save it to share.
All right, let me try on the computer. Let me go back on here.
You have to save it.
Let me try to enter back on the computer. Jesus help us at this time.
I apologize, family members. We have been a little bit of a challenge. The presentation from Ms. Bernard, Jeneva Allen. So, just in the interim, tax, there are two concepts, tax evasion and tax avoidance. One is legal, one is illegal. Tax avoidance is very much legal. So in your individual businesses or practices, ensure that you try to pick up on some of the concepts or some of the tax relief that will benefit you, and ensure that you make use of all the tax deductibles. For example, as a realtor, you use your vehicle predominantly to show clients different properties and so on. So as long as you can prove the percentage of the use that relates to your real estate business, you can claim. So in the past, most realtors, especially if you're full-time, can prove, let's say 60% or even 70% of the petrol charges. So as long as it's, the concept is, or the principle is, the main principle is, all expenses incurred wholly and exclusively in the course of your business. So petrol charges, also telephone charges, your real estate fees, advertising costs, anything that you can prove that is wholly incurred, wholly and exclusively in the course of your business. So in the meantime, Miss Allen is back.
What I'll do is I'll just talk from my head and forget about the presentation. I'll just talk to the things that are most important for realtors at this time. All right. So as you picked up on deductible expenses, one of the main problems that we find realtors have is, one, maintaining good record keeping. You have to be able to maintain good record keeping. And another challenge is, what are the things that I can claim as a deductible expense in arriving at the taxes that I pay? Now, deductible expenses would be all the expenses that you incur wholly and exclusively to earn your income. All of the expenses that you incur just to do the business. And you would not have incurred those expenses if you were not at all in the business that you are in. That is one of the main gauge that you use to know what expenses are deductible. All right. The next thing is, what about the things that I share, the assets or the capital that I share between myself and the other business, right? And so that you have that you use to the business. It is that you share that capital with for domestic purposes. For example, as my good fellow was alluding to, the motor vehicle, which most realtors use to maintain the records for insurance, the registration, the fitness, the licensing, the servicing of the vehicle, the parts that you buy. You would have to maintain those records, and then you apply a ratio to it. You apportion the expenses based on usage. So you would have to say, 50% of the time I get into this vehicle, I use this vehicle to do the business, and 50% of the time I use it to do pick up, go to the supermarket, go to church, go out on a date. Or you can say, based on how you use it, you can say 80% of the time I go in this vehicle, I go in this vehicle to do the job, to go entertain clients, go after businesses, right? So we operate a self-assessed tax system. That means the onus is on you. You hold the obligation. The obligation is on you to file and to declare to the commissioner what your income earning status is. And therefore, you are required to maintain your records and to honestly put on paper not just what you earn, but the expenses that are given to you as deductible, to claim them honestly and fairly, right? So one of the challenges, as I said, is knowing what to deduct and what not to deduct. Another thing from experience, I see realtors will have when you go off to study, because you have to, there are some things that you have to continue to do so that you can be up to date in what you are doing. No, education, if it is that the course that you have to do is a must, is something that you cannot earn or continue to earn in the field of your field of endeavor if you don't do this course, or the association says to you, if you don't do this, you can't be a realtor. Those expenses are deductible, right? So again, I said the guiding thing you have to keep in mind is this expense. Like one person said, well, what about lunch? Me have to eat lunch as a realtor. Well, I will say to you, well, you have to eat lunch as a human, right? So whether or not you are doing the business, you have to eat lunch. So lunch in general is not a deductible expense. But if you have to take a client out for lunch, and that is one of the things that realtors do often, you know, you take the client out in order to consolidate information and all other things. You take them out. Now, when you do that, that is deductible, right? So the pointers I want you to take, I was told I only have 15 minutes and internet popped down and take away about half of the time already. I want you to take away from this that you have to maintain good record keeping. One, you must get to your mind wrapped around what expenses are deductible and how you go about deducting them by applying a ratio for those that are shared. Some of you operate from your home. You don't have an office per se, so you share your internet, your light, those things, you share them. You have to apportion them based on usage. So you also have to be registered for e-services because 2019, April 1, it was made mandatory for all income tax returns to be filed online. So for those of you that are new to the business, you need to get registered for e-services. Your income tax return is due March 15 every single year. You have to maintain good record keeping, please, especially with regards to the motor vehicle. Now let us talk about other assets that you may use. Your cell phone. Some realtors don't have a separate phone that you use just to do the business. So rather than at the end of the day, not knowing what to spend, when you have a direct phone that you put to all of the expense that comes with that phone would be deductible. Not only the bills, but the credit and the internet service that you put on. But the phone itself is an asset. You use to do the business. You can claim capital allowance on the laptop, right? So there are benefits to filing your income tax return. When you have employees, because I know of realtors that have them large and in charge and have employees. If you have employees that you are an employee that operates from an office for you, then the taxes that you pay for the employees, if you pay them in full and on time, they are also can be given to you as employment tax credit. You can claim that against your personal income tax return. I don't know, many of you might know the numbers already to reach us, but my number to reach me for further information is 545-2834. I know I'm out of time and there are others coming on. 545-2834. You can call me and we can set up meetings or to see any way in which it is that I can help you. And the education unit at the Constant Spring Revenue Service Center is here to your own leisure. You can pop in. Yes, I know Corona is keeping, so you pop in with your mask on and come. And we are willing to work with you and to help you to do exceptionally well as relating to your taxable obligation. All right. Thank you. And sorry again for the delay.
Thank you very much, Ms. Allen. We have a question and answer segment, so I hope that you can stick around for that segment as well.
Oh, so I have to, it's not no.
No,
I would have.
Not right now, at the end, after the presenters. Yes.
All right. Okay then. All right.
You brushed on GCT as well, however, but just to add to our members here, GCT determine whether you're going to be a GCT registered taxpayer is very important, because when you register for when you're a GCT registered taxpayer, that means you have to file and pay GCT. Currently, the threshold is at $10 million, all right, for the year, 10 million. So when you register, you get the credit of input GCT. So it is more beneficial from an economic standpoint. That is the main benefit. However, if you choose not to register for GCT, what you have now is a competitive advantage. For example, the real estate commission is, well, commission is a GCT taxable service. And the listing form will indicate whatever percentage plus GCT. But if you as a realtor or as a real estate broker decides not to register for GCT, what the customer now pay is just the 5%. So those persons have a competitive advantage. But from an economic standpoint, you won't get the credit. So it depends on a person. They can determine which road they would take.
I would suggest, because I've had this discussion with many realtors who have to pay the GCT over. And I know there is a threshold, but you can still register for GCT, even though you might not have reached the $10 million threshold. But if you want to be able to claim back the GCT that you pay, right, you will have to register for GCT. There is no way around it. If you don't register for GCT, it's just going to be an expense to you that you would claim back when you are filing your income tax return. So for those of you who are not registered for GCT and you don't wish to be registered, you have the right to claim it back as an expense to you when you are filing your income tax return. So for those GCT that you have paid already, and because they're not registered for GCT, you would list it on your income tax return as an expense, and you're allowed to claim it back that way as a deductible expense. But it puts you in a better position to be registered for GCT because you, as against waiting till at the end of the year to file your income tax return to claim it as a deductible expense, it is best to register for GCT so that on a monthly basis you can claim back these GCT that you pay. So though you may not be at the $10 million, I believe you should have faith and write on the registration form, yes, I believe by the end of the year, I am going to reach that $10 million mark, and register for GCT so that you can claim it back on a monthly basis.
Thank you very much. So with that said, that means it puts you in a more advantageous position from a cash flow position. So the next presenter is Miss Atasha Bernard, and I'm inviting Miss Elaine Roach to speak on, to introduce Miss Bernard at this moment in time.
Hello?
We're hearing you perfectly.
Oh, awesome, awesome. Hi, everyone. Atasha Bernard, FCCA, FCA, MBA, founder and CEO. Atasha Bernard is an inspirational leader, an educator, a philanthropist, and an entrepreneur. She's a founder and CEO of ABBAVision Business Consultancy. ABBAVision provides on-demand CFO and consulting services to businesses to optimize, transform, and earn through effective financial management, risk management, corporate governance, strategic planning, and digital transformation. She has over 16 years experience providing strategic, financial, general management, and auditing expertise in the financial industry, manufacturing, distribution, nonprofit organization, and agribusiness for public and private companies. She's a director at G5 Cybersecurity Inc., a cybersecurity and data privacy company. She's an educator, lecturing in financial decision-making for the Harriet Watt University MBA program, innovations and business performance for the Association of Business Executive Diploma course, and the Certified Management Accountants program with B&B University in Jamaica. Atasha Bernard is a chartered accountant since 2010, a member of the Institute of Chartered Accountants of Jamaica and the Association of Chartered Certified Accountants. She holds a master's in business administration, specialized in strategic planning from the Harriet Watt University, a certified expert in microfinance accredited by the Frankfurt Business School, completed a diploma in corporate governance through JSC/PSOJ, completed a certificate in Jamaican securities with UTEC and JSE. Also, she holds an associate degree in business studies, accounting major with Excelsior Community College. She's an active Rotarian since 2010 and is a past president of the Rotary Club of Kingston, East and Port Royal. Ladies and gentlemen, please welcome Miss Atasha Bernard.
Good morning, good morning, good morning. Just making sure that you're all hearing me, right?
Definitely.
Okay, thank you for that lovely introduction. A pleasant good morning to you all, to all the executive of the Realtors Association of Jamaica, all the realtors, brokers, agencies, ladies and gentlemen. A pleasant good morning to you all. It is my indeed pleasure to be here today to share with you. And the topic that I will be focusing on is, let me share my slideshow. You're seeing my screen, right?
Yes, we are.
Okay, good. So today I will be focusing on effective record keeping for taxation purposes. And my fellow panelist, Ms. Allen, did emphasize earlier of the importance of effective record keeping. So let's go. So as a finance profession, it is my belief that financial results are the finished products of people's actions. So act now. So yes, you probably preparing now to do your tax returns for 2020, but how can you plan differently for 2021? So when that you're filing your 2021 returns, in 2022, you're much more better than this year. So it's always good to look back, but it's even more important to look forward. So some of the key things that I will be looking at today is just an overview of some key accounting terms. So when you hear of them, you do understand. I will also look at accounting net income versus taxable net income. I will briefly look at GCT income versus income tax income, tips and benefits for good record keeping, as well as some benefits for paying taxes as well, and just an overview of the applicable tax return forms. So when you look and think of accounting, sometimes these terminologies blow over your head, but just sometimes we need to go back to the basic, and that is what I'll be focusing on today. It's important to know the basic. When you're thinking about liabilities and creditors, this is normally what you owe to someone. When you think of assets, from the real estate perspective, some of your assets as sometimes you maybe even forget that some of your signs could be considered as assets, especially if those signs can be used for more than a year and on and on. And some of those signs you can claim capital allowances on those signs, which can reduce your tax liability. What are some of the receivables? Your debtors, probably you have earned some commission, but you have not received the commission. Your income, more likely your commission will be classified as your income. What are some of the expenses? So a lot of you would probably do a lot of social media marketing, especially now when you cannot go to places. You may not be familiar with all the social media tools. So you may ask somebody to do it for you and you may have to pay that person. Those are some of the allowable expenses that you should be able to claim. I know most times we will use our phones to take photos, but perhaps you may have to engage a photographer. Those are some of the expenses that you will need to consider. You may have license fees, the RAJ fees, the real estate board fees. Those are some of the expenses that you must keep track of. So when we look at accounting net income versus taxable net income. So from an accounting perspective, it is normally seen that accounting net income, which is often called profit, is typically your income less your expenses. However, for taxation purposes, your taxable net income, otherwise called chargeable income, is a little bit different from your accounting profit. And your accounting net income is normally add back some expenses that are not allowed for taxation purposes. And some of those expenses are probably depreciation on some of your assets. However, there are other allowances that you can claim to reduce your tax liability, which would have reduced your taxable income. And some of those credits are pension relief. I will speak more on that later. Capital allowances. So for taxation purposes, depreciation, which is normally for accounting purposes, are normally deducted to get your profit. But for taxation purposes, capital allowances are normally claimable instead of depreciation. Nobody's going to forget their income tax threshold. So those are some of the adjustments that are normally made to the accounting profit to arrive at the chargeable income. So let us look at GCT income versus income tax income. Total income used to file monthly GCT should be the same as total income at year-end. So normally, if you're GCT registered, you will file your GCT monthly, but you will file your income tax annually. So you will find situation whereby what you have filed monthly, when you collect that information, it doesn't equate to what you are filing for your income tax. You need to ensure that both income are the same, because you will run the risk of tax audit or tax penalties if it is different. Some of the tips for good record keeping are, and it depends. I know we're moving into a digital age and there are a lot of hesitation, especially now with what is happening as to, should I store my information online or physical? It depends. But one of the things that I will also like to encourage you is that there are benefits of storing information online. And a lot of times, the reason why yes, you may be more exposed when you store your information online versus physical. But one of the things that we should not forget is that when you're in a physical space, if you have an office space, most time your documents are locked in a filing cabinet with a key. It is in an office. The office is locked with a key. For you to get into that office, you would have to pass the security at the gate. You would have to go through many doors to reach that filing cabinet. It is the same approach for online storage as well. So what is important is that ensure that you have the right support to assist you with ensuring that you have online security for your online storage. So similar to physical location, you will normally outsource your security services to a security company. So probably you will need to consult with a cybersecurity professional as well to ensure that you have adequate security to protect your data and information online. Tips to ensure good record keeping is to implement processes and systems to maintain records so that documents can be retrieved easily. All transactions must be duly supported by receipts or invoices. And don't forget this one, notes. Sometimes you may have a situation where there's no receipts or invoices, and it happens because you may be on the road because you visited a property in rural Jamaica and you need to buy lunch, as Ms. Allen said earlier, because you have taken out your client. But those little corner shops, they are not going to give you a receipt because they do not use receipts. So most times you do not remember those purchases. So if you keep notes and write those things down to say that I went to Moko and I've purchased lunch for $3,000, X, Y, and Z, at least that can be used as some support when you're filing your returns. Importantly, use separate bank accounts for business versus personal transactions. When you separate your bank account, it is much more easier for you and the person that is assisting you in filing your return to account for business transactions separate from personal transactions. And that probably may go the same for credit cards as well. If you have a business credit card, it should not be used for personal transactions. If you have a personal transactions and you have used it for business, you will need to ensure that you separate what is personal for business. I know sometimes you're a sole trader, so you may just have one credit card. Some of you may just have more than one credit card. So even if you're a sole trader and you have more than one credit card, perhaps you could just assign one for business only and use the other one for personal. So when you're going through the statements and when you're doing your accounting and tax filing, it is much more easier. Yes, you will have physical documents, but it's also important to back up these invoices and receipts, probably a summary in Excel if you do not have a lot of transactions to use an accounting system. Most of us will use OneDrive, Google Drive, and those are online storage. Ensure that you have password to protect these information. There are some receipts, which is the thermal paper. Most of the times when you get those receipts, within a couple of days, it's faded. Those information, sometimes it's better to copy those receipts so you will have more durability. And as mentioned earlier, protect your information online. Other tips for good record keeping is to ensure that you record transactions periodically based on volume. You may need to set one day out of the week to do recording, bookkeeping, accounting. You may need to do it daily if that is your preference, or you may need to do it monthly, but do not wait until the end of the year. Keep on file documents in one area until time is allocated to file. So most realtors, because your work is mostly on the road. So I will say that most times you probably spend most of your time in your vehicle. So probably you could have a little box in your vehicle with some on-file receipts and invoices when you do transactions. And then when you have a specific day of the week or a specific day within the month, you will pull out that box and file the documents. You will also need to ensure that you note mileages or gas bills for business versus personal traveling. You will also need to ensure that assets are not treated as expenses and expenses are not treated as an asset. You will also need to track loan payments for business and separate principal versus interest payments. So if there is a business loan, so if it is that you have taken out a loan to purchase a motor car, the motor car that you use, you haven't used that motor vehicle for 100% business. You probably use it, let's say 50-50 in this case. Part of that interest can be allowed for taxation purposes. So you will need to ensure that you get from your financial institution, if you're paying 20,000 per month, how much of that amount is interest versus principal? So you can claim those interests, a portion of that interest payments from your tax returns. So there are benefits of good record keeping. It allows for better decision making, better controls to prevent fraud or theft, less time to collate information. It saves time, less hassle, ease of doing business with financial institutions. It's a sign of good management. It enables better customer service by providing timely response. It safeguards data and information. It improves legal compliance and more likely to capture all business-related expenses. So when you keep good records, you will keep a tab of all the business-related expenses. But when you do not keep proper record, you will forget, because you will rely on your memory 1 year after. I'm sure most of you know, trying to remember, okay, what did I do last year, January, March? And I'm sure a lot of things you would have done, not claiming as allowable expenses now because you did not take note of them. There are some tips to consider to reduce your tax liability. Do you have an approved individual retirement scheme? So I know some of you may have a pension, an individual pension scheme, because if you're self-employed, you do not have an employer, but you may be engaged with an institution where you're paying pension. So most times the pension is saved for retirement. However, some persons may be saving instead of an approved pension. The difference with having the regular savings versus participate in an approved individual retirement scheme is that you can claim contributions up to 20% as tax deductible, which will reduce your tax liability if you're participating in an approved individual retirement scheme. Some of you may have made donations to charity, but not all charitable organizations are approved based on the approved list. So you will need to ensure that those donations that you have made are on the approved listing. You need to ensure that your capital allowances are claimed based on the assets that you own that is involved in the business. Pay your taxes on time to avoid penalties and charges. This will definitely reduce your liability. Maximize on tax-free traveling allowance. And if you're not sure, consult with your accountant, tax administrators, or your attorney. These are some of the forms to consider when doing your tax returns. You have the ITO1, which is the return on income tax for individuals or self-employed. You have the ITO2, which is for companies, and you have the ITO7, which is for the estimated income tax. So why do I have to be paying taxes? What is in it for me? What are the benefits? So some of the benefits to consider of paying taxes: you can access housing benefits with NHT at lower interest rates, because when you pay your income tax, you ultimately pay all the other taxes as well. You can access benefits from NIS, and a lot of time you have persons probably did not have any other life insurance, so when they die, at least their beneficiary could go to NIS and get some death allowance to assist with funeral expenses. And there's some pension allowance as well when you reach pension age. It gives ease of access, obtaining credit facility with financial institution. And I will tell you that most financial institutions now are asking for a copy of your last tax return, because when you're in the process of obtaining a loan, they want to know what are all your liabilities. And if you're not paying tax or you cannot provide your annual tax return, it simply means that there are tax liabilities that you're not able to support or give to the financial, disclose to the financial institution. It enables you to get a tax compliance letter to do business with most established organizations. It reduces the exposure of tax assessment. It reduces the need for you to attend tax court if you're not paying taxes. And just by paying taxes, you can be a proud contributor to the development of the country. And another benefit is to avoid penalty and interest. So that's it from me today. Be compliant, pay on time. I can be contacted at 403-5212. Thank you very much for listening, and have an awesome day.
Thank you very much, Atasha Bernard. That was a very informative presentation. I hope we can get some details so we can read in our own time. However, in the question and answer, there were some questions being asked from the members. So we will get those answered in the question and answer section. And of course, you can leave your phone number so that others can contact, all right? All right, the next presenter is Mr. Donovan Walker, and I will ask our very own Accounting and Compliance Officer, Miss Melissa Otto, to introduce it.
Good morning, everyone. So Mr. Donovan Walker is the managing partner of Hart Muirhead Factor. He practices in the areas of corporate, commercial, maritime, real estate, mergers and acquisitions, sports and entertainment law. Donovan read for a Bachelor of Laws at the University of the West Indies, as well as a Master of Laws at the University of London. He also studied at the Norman Manley Law School, where he is presently an associate tutor for the Law of Associations. He is named as one of the leading commercial lawyers in Jamaica by Chambers Global, as well as IFLR. Ladies and gentlemen, I present our third keynote speaker, Mr. Donovan Walker, attorney at law. Sorry, Mr. Walker, we're unable to hear.
Hi, everyone. Good morning. Can you hear me now?
Yes. Not hearing you now. Yes.
Well,
it keeps going back to mute.
okay, when things go wrong, they really will go wrong. So thank you all for your patience. I'm hoping that you can all hear me now. Good morning, everybody. Is everyone hearing me?
Yes, yes.
Okay, thank you very much for that. And thank you for the warm welcome and for your patience. So what I want to do is to briefly discuss some other legal, administrative, and ethical considerations. Ms. Bernard and Ms. Allen provided you with some very useful information. Before I start, I certainly want to wish you all health and hope you're all safe. It's a very difficult time for all of us. And so I hope everyone is healthy. I had sent because I'm on my phone, I may have a difficulty sharing my screen, but I had emailed my PowerPoint presentation, and I'm hoping that the administrators of this meeting can share my PowerPoint. Is that possible, RAJ? And while you share, I just want to extend a welcome, thanks to your president, thanks to Joan Latty for inviting me. But okay, time is money and everybody's busy. So while we get that screen shared, I'm not seeing it shared yet. Could you let me know when it is shared? But I'll start my presentation.
Yeah, so yeah, I agree. Start the presentation and if
Right.
you can share it, we will.
Right, so while I'm not much to look at, I was hoping the PowerPoint really only sets the stage. So there are really a few things I want to speak about, just as an overview. I want to give the RAJ team a general overview of Jamaican tax legislation, as well as some important constitutional issues. I then want to touch on specific tax legislation that can impact on real estate transactions. If you could go to the next slide, I see that we're now sharing. If we could go to slide 2. Right. I then want to go to look at other transactional considerations. I want to then look at offshore entities and the ownership of real estate and tax implications of that. I want to suggest to the RAJ, if I might be so bold, some reform and RAJ lobby efforts that could be done perhaps in collaboration with the Bar Association and others. And then if we could go to the next slide, I want to make some concluding remarks and then open up for questions. So if we could go to the next slide. So just so that everyone realizes everything that the former presenters have talked about, Jamaica's taxing regime is entirely legislative based on acts of parliament. Now, what I'm telling you is Taxation 101. The Jamaican Parliament and the House of Representatives has control over Jamaica's finances. Taxation cannot be levied without the approval of the House of Representatives through the passage of a parliamentary decree law. This harks back to the ancient cry that we would have all heard of, no taxation without representation, the Boston Tea Party and all of that. But that still harks true in our constitution. So what's interesting about tax is that it has to be passed by parliament. There is no way a government can pass a tax that has not been legislated. And so we have had cases in Jamaica where the government has tried to impose a particular fee or something, which really, when you look at it, it really is a tax, and the courts have struck it down. And so I just want you guys to understand that any tax that is imposed needs to be by statute. And from one perspective, it makes it easy because you can then find it. It must be written somewhere. Nobody can invent it. It's not a creature of common law. It's a creature of written statute. So that's the first concept. The next concept, if we go to the next slide, is that property ownership and land tenure are protected by the Jamaican Constitution. You guys as realtors, I think, need to know this. The Jamaican Constitution, under the sections dealing with fundamental rights and freedoms, states that Parliament shall pass no law and no organ of the state shall take any action which abrogates, abridges, and infringes these rights. The rights and freedoms follows the protection of property rights as provided in Section 15. So you cannot abrogate and unilaterally take away property rights without compensation. And our Jamaican courts have jealously guarded this. Now, as realtors, you might say, so what? Why is Donovan giving us this constitutional lecture? But here is why. I can tell you that a number of times, and you may have heard it as well, an overseas investor comes in, is about to invest money in buying real estate or doing a development. They want to know that their properties can't be unilaterally taken away from them, and there is this protection. And sometimes with particularly foreign investors, they want to know this. And so I'm just sharing with you that one thing you can say to them is that there are constitutionally protected rights. The other issue, and if we could quickly go to the next slide, property rights under our Constitution are granted not only to individuals or human beings, but to corporations and companies. So for example, companies that are incorporated in Jamaica under the Jamaican Companies Act have protection. Section 4.1 of the Companies Act states, a company has the capacity and subject to this act, the rights, powers, and privileges of an individual. Also, overseas companies registered in Jamaica have these rights as well. Section 364 of the Companies Act says, a company incorporated outside the island shall have the same power to hold lands in the island as if it were a company incorporated under this act. Again, the importance of this, colleagues and friends, realtors, is that you want to be able to say with certainty to your clients that they have certain protected rights that are enshrined in the Constitution. So that was Taxation and Constitution 101. So the second part now, if we could go to the next slide, I want to take us quickly to an overview of specific taxing legislation that impact on real estate transactions. So our first two presenters were focusing on taxation from the perspective of your business, your income tax. I am more looking at it from taxation when you are speaking or dealing with your clients and their transactions. So I'm taking a different view. So I've listed here 9 specific taxing legislations that can impact on real estate transactions. The first, of course, as you all know, is the Transfer Tax Act. All of you know that over the successive years, transfer tax has been gradually reduced. And a lot of that has been thanks to the efforts and lobbying of realtors. Some of you may know that, but a lot of you don't. That successive governments have really reacted favorably to lobby efforts. And I know the realtors, and I have to commend you guys for this. Lobbying the government is important. And I think primarily because of your efforts, we now see a 2% on the value of land as assessed by the Jamaican Stamp Commissioner. So that's one aspect of transfer tax. But I want to let you guys know something, which you probably already know. The discretion of the Stamp Commissioner is important. Transfer tax. I just want to make sure somebody was trying to call me. Are you guys still hearing me in the presentation? Could somebody just say that?
Yes, we're able to hear.
Wonderful. So thanks. So the transfer tax, that 2%, while we as lawyers will usually put the agreement for sale in for assessment, it's not fait accompli that they will accept the 2% of the value stated as the purchase price. the stamp commissioner always has a discretion. And sometimes, and it's happened to me on more than one occasion, when the stamp commissioner, when we have a purchase price of, let's say, $1 million US, the stamp commissioner might come back and say, no, this place is worth 1.5 million. So when we go to object or have a friendly meeting with them, because before launching on a lengthy appeals process, I find that it's useful to go into the stamp commissioner and have a friendly chat to say, why did you come up with 1.5 million? This is the true price that we have come up with, 1 million. On more than one occasion, I've said, oh, we went on such and such realtor's website and we see the same property listed for 1.5 million. Now, this is no fault of the realtor because the realtor is trying for the maximum price and will list it at the maximum price. But many a times we now have to say to them that, yes, that is the asking price, but it's been listed for how many months and the vendor has decided to take a reduced price. So you can't value it based on what the realtors list on their website. So it really just sharing with you because sometimes we find it rather funny that the stamp commissioner is coming back to challenge the value of a transaction based on what's listed on the website. The next issue, and you can stay right where you are, is stamp duty. You don't have to go back because stamp duty, of course, again, because of your lobbying efforts, have been reduced to a flat rate of 5,000 Jamaican dollars. Now, unlike transfer tax, which has to be under the Transfer Tax Act, borne by the vendor, stamp duty in agreements are normally split equally between the vendor and the purchaser, but that doesn't have to be. Just so that you all know that stamp duty can be negotiated and borne by one party or split equally or split in different percentages. But normally, as you know, stamp duty on transactions are split equally. The next issue has to do with general consumption tax. Of course, the GCT really impacts on realtors' commissions, which is currently 15% of the commission collected on the stated purchase price. And again, we find that perhaps, and when I get to the lobby section, this is something that perhaps the realtors could look at because we've seen a continuous reduction to make transactions more attractive. And I think that certainly the realtors could deserve a break, maybe to have GCT on realtors commissions either dealt with specially or maybe even zero rated. I'd love to hear from the association as to whether any attempts have been made to lobby for that change. Property tax, of course, unlike in the United States, and I find this to be a problem, their property taxes are calculated on current market value, or property taxes are on the unimproved value of the property. And again, it's something that is important for realtors to realize that together with the lawyers, we need to let the client know from the very beginning that they need to get their property taxes up to speed. Many times, when the lawyers becomes involved, some purchasers or vendors don't realize that the property tax has to be up to date, particularly when doing the transaction. Income tax. And I won't touch on this, safe to say that Atasha gave you an excellent overview. And from the vendor's perspective, especially if the vendor is a company, one of the things that they will need guidance on, and it might be good for you guys to know, is how accountants treat sale proceeds, particularly for corporate sales. How the real estate is carried in the books versus actual proceeds received. Some of you may know this, but I think just for your own knowledge, it would be useful for you to get to know that area. And of course, experts like Atasha and the folks at the TAJ can give you some guidance as to that. Double taxation treaties. A lot of the times, the way taxes are treated in Jamaica are dealt with, especially if your client, the purchaser, is an overseas company that is registered in Jamaica, they need to consider tax implications of the transactions in their jurisdictions. Again, we're not asking for the realtor or even the lawyer to become a tax advisor, but certainly you would want to say to them, listen, before you do certain things, perhaps you better check with your US lawyer or your US tax advisor to find out, or whichever jurisdiction the person is from, to make sure that this thing will fly, this transaction will fly in your jurisdiction and it won't burden you with tax issues. And if it does, the double taxation treaties will help you. Next issue, if we go to the next slide, is tax incentive legislation. A lot of us, or I don't know, let me not say this, but resort incentive legislation, villa incentive legislations, through TPDCO, I think it's important for realtors to have a base knowledge of these kind of incentives. So when you're selling in those particular types of properties, you're able to say, you know what, with the proper application and structuring this right, you could get certain incentives. Likewise, issues like the special economic zones, and when you're selling properties for real estate development, we have added to our practice advising and guiding clients as to guiding them through the maze of the Special Economic Zone Act 2016. And again, it might be useful, maybe the part of your continuing education might be to have attorneys or the SEZ itself come in and speak to you guys, if you haven't done it already, about this act, and likewise the Jamaica Tourist Board on incentive legislation. It would be good for you guys to know this. The issue of waivers could be important, and just the only thing I will say there is that every taxing legislation, whether it is GCT, income tax, property tax, the minister in charge has a power to remit or to waive. Now, I will never be bold as to say how they will remit and how they will waive. It is on a case-by-case basis, but there might be certain circumstances where it might be just and equitable and fair to apply for these things. And again, it's good for you as the realtor to know that these waivers exist. And so the last thing I want to say is that you use your TAJ help desk as an attorney. Many times I've called the TAJ, and their communications office has really evolved and grown, and they're very helpful in terms of giving you guidance. Likewise, accountants and tax advisors like Atasha are useful for you to either get information for yourselves or to guide your client to say, listen, here are one, maybe two people that you can reach out to get advice. So the next area I want to touch on, if we could go to the next slide, and I'm just racing through this to our other transactional considerations. Now, I want to quickly touch on the use/abuse of chattel agreements. Now, sometimes real estate transaction, you might not only be selling the land and the building and the fixtures attached thereto, but you might be selling items of equipment that are in a house or a business that may qualify as chattels, whether fixture, fittings, equipment. I won't even get into the list because it's not exhaustive. Now, chattel agreements used properly could have the benefit to a client of legally minimizing the tax obligation or impact on the sale of land. Now, what some people try and do is pad the chattel agreements. And you say, boy, you know, these chattels are worth 15 to 20 times what they are. And that, to my mind, is abusive and something that should not be encouraged. But certainly you can say to a client, why don't you consider splitting your contract? The advantage to you, particularly as the vendor, is that you will save 2% transfer tax on the real estate sale by putting properly valued chattels in a chattel agreement. Now, the other advantage of it is that there could be, especially if you're selling from one business to another, the GCT on selling in that regard has now been zero rated by an amendment to the GCT Act. So again, that's important for you to know. Lawyers and accountants will no doubt guide on this, but I think it's important for the realtors to know this as well. Using contracts such as bushing, dressing, and supplemental agreements. So for example, you might be selling the land, but there are blueprints or approvals or permits that could be assignable if they are, that or certain things that you will do to make the land during the sale process more attractive, not you, the realtor, you, the vendor. So again, these kinds of supplemental agreements might be useful and have been used legally and properly. Again, encouraging your client on certain developments over a certain number of units to register with the real estate board. And the reason why you encourage that is that these transactions, there is a transfer tax saving. So you don't pay 2% transfer tax on developments over a certain size, you pay a lower rate. So again, to guide your clients in that regard. Estate planning. Now, what's interesting is that when I had started practicing, a lot of people used to estate plan because if you left the properties to probate and you never transferred it while you were alive or inter vivos transfers, you found yourself ending up your estate paying a fantastic amount of estate duties and transfer tax. Now, the way I'll describe it, it might be cheaper to deal with your land under a will, seeing that the estate duties are now, I think, about 1.5% over 10 million, and that clearly is cheaper than the 2% transfer tax. So certainly one thing that we do as attorneys is assist our clients, particularly individuals, with estate planning. And it's interesting how in the past 10 to 15 years, whereas we used to do a lot of inter vivos planning, a lot of attorneys are now advising, hey, you can transfer during if you want to, but if you leave it in your will, it might be better and cheaper for the estate. The next slide, please. Hello? Can we switch to the next? Oh, great, thank you. The next issue is understanding the legal process and what lawyers do in transactions. And again, the only thing I want to say here, it might be useful that a lawyer is invited to take you through the transactions. Many of you know it, and many of you know it very well, but I think it would be useful to find out what attorneys do in transactions. And this isn't really a tax issue, but I think generally speaking, it might be useful for the RAJ to understand the members, what the attorney does, and to ask some hard questions in terms of how things can be processed. And you guys might have ideas about how we can do things better. And so we'd love to hear from you, certainly the Bar Association, I'm sure. Another thing, just another tip in terms of saving, this isn't really a tax, this is a fee. Again, there can be a saving on registration fees if when you're registering a transfer of land that you register the mortgage contemporaneously, there's a 50% saving on the mortgage charge at the titles office. And so I think it's important to let purchasers know that as well. And I also think that generally speaking, there's some non-tax legislation that it's important for realtors to just have a basic knowledge of. Cannabis licensing, SEZ processes, subdivisions, municipal rules, because I find that realtors that come informed and can let their clients know that, hey, these are things that they consider. I know when I've used realtors and the realtors that I use, I really do appreciate their advice and guidance, which is not simply, it goes beyond simply here, sign my form and sell my land. And I won't call any names, but I know there are very good realtors out there who have provided me personally with some excellent guidance and advice. And if the RAJ could lift everybody up to those type of standards, and one way to do this is to do what you're doing now, to have these sessions to give knowledge and impart. Next thing now is other transactional considerations. No, I'm sorry, I finished with that. The next, if we could go to the next slide, kind of winding down now. Kenley's, thank you. One thing that I wanted to suggest to realtors is guides and checklists. What is usual in transactions, most Jamaican vanilla flavored conveyancing transactions, are let's get the water rate, let's get the property tax rate. You're going to do a surveyor's report and evaluation report, and it tends to stop there. What is not usual and ripe for service development, whether it's lawyers or realtors, is to develop a suite of services. Some larger realtor companies have already delved into property management, which is good. Some have valuation arms, which is good. But in addition to that, there are some not typically offered services which I think are ripe for development. And those realtors who do it, I really should commend you for doing it. Those suite of services include perhaps guiding a client as to who can conduct environmental audits, to introduce, there's a particular realtor who said to a client, you know what, this is an older house. I can make an introduction to you to a plumber and an electrician to go in. You have to pay them separately to do quick checks. And that was actually me. And I was very impressed that the realtor said, you know, there's a particular person I could introduce you to. There are certain structural checks. You could get somebody to come in, checking for termites and what have you, and maybe coming up with a checklist for your client, saying these are things as a purchaser you can look into. And likewise, with a vendor, why don't you make sure that these things are all in place so as to avoid any delays or problems and to have a smooth transactions. The Nepa review process is something that's so underutilized. Do you know you can pay the Nepa $5,000, particularly as a developer, and they will give you a preliminary report in a few days as to the use and how much habitable rooms you can get in a particular area. And I think that Nepa review process, as Nepa has told me, is so underutilized. Some special use checks. For instance, if somebody's buying land for agricultural use, you might suggest to them, why don't you get a soil and water test? We had one client who signed an agreement, didn't do the soil test, did it, and realized that for their cannabis purposes, the land was contaminated and we had to abandon the transaction and start again. And so I think a lot of the times, the Strata Commission now issues a certificate, and you can say this to vendors, especially those in apartments. They will give you a certificate as to the state of the strata, of the particular strata, that everything is paid up to date. This is not, the annual reports have been filed. It's a one-page document. I'm sorry I didn't have the time to put it up to show you what it looks like, but these are things that, again, realtors could say to vendors, you know, you should really, especially if it's an apartment, why don't you get a strata approval certificate showing that everything is in order? Certainly, I advise clients of mine who are vendors and purchasers to get this thing. And it's something we can speak about more. The Nepa review process is really the density analysis, and that's what you pay $5,000 for. The next slide If we could, and I think which is just my final slide. I'm pointing out that offshore entities and the ownership of real estate using offshore entities. The only thing I will say here is that some transactions, particularly where it involves multi-jurisdictional efforts, it can be structured to not, without evading taxes, taking into consideration transfer pricing, but some transactions, it might be used for the real estate to be held in an offshore entity. For instance, in a very tax efficient jurisdiction that Jamaica has a double taxation treaty with, like St. Lucia, for example, Barbados. Again, that can be a whole seminar on its own, but it's something that everybody needs to go to be useful to know. And then the final thing I want to say to you all really has to do with our RAJ lobby efforts. As I said before, I am certain that the Realtors Association had a lot to do with getting the transfer tax reduced from, I think when I started practicing, it could have been 15% or 12.5%, down to 7% or 7.5%, down to 5%, then down to 2%. And it's fantastic. But there's some other things that could be considered, and you probably already have. Registration fees at the titles office haven't been reduced. And on large transactions, you could end up paying significant amounts of registration fees. So on transactions, registering mortgages, registering the land, it adds up. It might even be more than the transfer tax when all is said and done, particularly if there are waivers involved. Zero rate GCT on some real estate transactions, such as resort developments. Perhaps the Commission on Resort Developments could be looked at for realtors. The realtors could lobby for faster SEZ processing structures, because while the SEZ is great, it takes quite a long time to get it done. And in a collaboration with the Bar Association and PSOJ, there could be that lobby effort. And there could be, and this is, I guess, my lobby, I find that, and you guys can tell me because maybe there's such a thing in Jamaica, a purchaser's realtor. I think there's value in a purchaser retaining and charging, being charged a fee by realtors to go out there, look for them, scour the places, find 4 or 5 good properties, maybe even negotiate prices, and come back to them. And their duty is to that purchaser. Typically what happens is that the vendor's realtor is the realtor that is being dealt with, and the vendor's realtor's interest, and understandably so, because his duty is really to his client, and of course to the canons of your realtor profession. But the purchaser now, who's really assisting him and protecting him? And I've thought that it might be useful for, and maybe there's some clients who would pay for the services of a purchaser's realtor. So that's something that could be thought about by you guys. So my concluding remarks, thank you. I hope I haven't bored you. It's been a pleasure speaking to you guys. Let's go back to that slide. I want to say to you that use the TAJ, use your accountants and tax advisors like Atasha Bernard. There are thousands of very good attorneys out there who practice extensively in real estate. And before we get to questions, I just wanted to make one last comment, which I added this while listening to Atasha's slide. If we could go to the next slide, please. I've noticed with interesting pleasure the use of social media. You guys can't show to the extent you used to, so there are a lot of online videos, whether they're on TikTok or TikTok, whatever you call it, or wherever else. And what I'm saying is that if you're using big data and you're using these social media sites, they really have to be used responsibly and I think ethically. And I urge the Realtors Association perhaps to guide their members about the responsible use of social media applications in keeping with the canons and rules of the RAJ. So with that said, if we could go to the final slide, that is really of no, we won't even discuss that. That's just a statistics. But colleagues, friends, realtors, thank you for listening. It's been my pleasure. And I now hand it back to the RAJ team, and I wish you all safety and health during this difficult time. So thank you very much. Take care.
All right, then. All right, and thank you very much, Mr. Walker, Council Walker. That was a very, informative as well session. I made some points which we'll handle in the question and answer section. We're actually at that moment right now. Let me get up the questions that were typed in the chat. Just from memory, as before the questions come up. Mr. Walker, you just mentioned about the SEZ Act, Special Economic Zone. That's of interest to me, however. From knowledge, I think I remember that this act actually repealed the Free Zone Act. However, I'm not sure of the highlights from this act and what specific knowledge. You spoke about some legislative knowledge that will assist us in carrying out our duties, our roles as realtors and realtor associates. What is important for us to know about this act that will put us at an advantage?
Yes, well, thank you for that. That's a very good question. And so what happens is that there are certain financial and revenue incentives that are given to successful applicants to the zone. A lot of people think that the free zone is one of these large entities with multiple users, and of course it is, and it may well be. Kingston Wharves, for example, has that kind of free zone, and the Montego Bay free zone is such a zone. But you can apply successfully for single entity free zone status. As a matter of fact, my firm applied successfully for the single entity free zone status of the 9th floor of a building in New Kingston. So it doesn't have to be only land, or it can be it can be a building or a part of a building. But the key thing is to be able to satisfy the requirements of the Special Economic Zone Authority. They have a very useful website, and that website lists all the benefits and the incentives that you could have in relation to special economic zones. And quickly looking up, I have a checklist here. There is the benefits really include corporate income tax relief, relief from income tax on rental income, GCT relief on all goods and services entering the zone, the employment tax credit, promotional tax credits, capital allowances. You get a remit of 50% of any stamp duties payable, and full relief from transfer tax as a developer. The occupants of a free zone also get certain reliefs, but not everything a developer gets. But again, if you invite the special economic zone to come in, they would be happy to speak to you, to guide you through that. process. They have done it for the Bar Association and other associations. I hope that helps.
Yeah, could you list a few of the requirements?
The requirements for
single entity status, single entity status. Some list of the requirements.
So, so just to, in terms of going through the requirements, they really are listed in an application form. The application and processing time for a new SEZ is, for a developer, is about 120 days maximum from the submission of completed forms with supporting documentation. So there's an application form that's available from the SEZ website. You download it, you provide the supporting documentation, you pay, there's a fee that's payable, a license fee, which I think is real, and this could be subject to change. I think it's 20 US cents per square foot payable by the developer. And the SED designation is applied to both the company as well as the physical location. And all SEZ companies need to register with the SEZ authority, which is in keeping with their regulations. Again, I'm sorry that I just didn't come prepared to delve into the application forms and processes which are available on the SEZ website, but that gives you a summary in a nutshell.
We'll invite you again to delve further.
We are happy to come. There is another attorney in my firm who is our SEZ expert. So of course I would defer to her, and I'm sure she'd be happy to present to the realtors. But in addition to the private lawyers, the Special Economic Zone Authority itself has a communications department. And we'd be happy to present jointly with them, but they'll be good people to speak to as well.
Yeah, and thanks again for highlighting earlier in your presentation, you highlighted the lobbying efforts of our association as it relates to the reduction of the transfer tax and stamp duty. I remember from memory, transfer tax was once 5% and stamp duty was 4%. Almost.
No. So I'll just stop you. But even my memory, perhaps my gray hair might tell you, and some of the other realtors will tell you that transfer tax at one stage was 12.5%. And I believe, and this is now digging back, it could have been as high as 15%. But certainly 12.5%, which is why we had an initial payment of 15% deposit. And nowadays, asking someone for 10%, certainly you can go down to 5% now, because the 5% can more than cover the initial outlays.
I'm saying it's really remarkable now that we are down to less than 3%, I would say, in terms of total fees, in terms of
$5,000 or 2%, half of 5,000 for the
half percent for the registration fee, so less than 3% in total fees.
Correct.
Okay. Right. Earlier in the presentation, I think this question is directed to possibly either Jeneva Allen or Atasha Bernard. The person asked if for realtors, which forms are applicable to. They listed ITO1, ITO2, SO2, and SO4. Could you give us a brief outline as to which forms relates to us?
All right. For the form that would relate to the realtor, for the self-employed realtor, would be the SO4, the S04 income tax return, and the SO4A. The S04 is for the previous year, because we're now in 2021. So the S04 would be asking you to report the income and expenses for 2020. And the S04A would be the estimate for the current year. So that is what is required from the realtor. Hello?
Thank you very much. Let me go to the other question. The person wanted some more explanation about the ratio of expenses that may be applied in terms of the deductible expenses. That for example, last year, one person, it may vary from year to year. So you may apply for this ratio this year, but let's say next year you may travel more and the ratio may be increased. So let's speak about the ratio a little bit. I touched on it in my opening remarks as well, but
yes. But like I said,
yes.
Like I said, ratio, you apply the ratio based on usage, right? That is the key factor that you need to consider based on usage of the asset or the capital, right? So the most the thing that most realtors use or share between themselves and the business would be the motor vehicle, right? So I gave the example of you would have to maintain all the records for the year, all the gas you put in the vehicle, all the cost of servicing it, tires, licensing, registration, insurance, part that you buy to put on this one vehicle that you share between yourself and the business. Now, as the ratio that you apply every year may be different, but what is constant is that you apply that ratio based on the usage of the vehicle for that year. So I gave the example that when you sit and you look at it, you objectively look at it, honestly look at it, you can say 60% of the time I go in this vehicle, it's for the job. I go in it more time to do stuff for work than I go in it for myself. And I would honestly say it's about 70% of the time. You know, I use it, it's for the job. There are persons who will say 80% of the time I go in this vehicle because where's Corona keep? No, I only go in this vehicle when I have to, right? To go out on the road with clients or stuff like that. So you, as long as you maintain your records, and you try to do it honestly and fairly, right? You say half and half, it's half and half. I can honestly say 50-50. 50% of the time I go in the car, it's for the job, and 50% of the time I can say it was for personal usage, right? You apply that ratio to the entire expense that the vehicle would have incurred for the particular year. For 2020 gone, you sit and you look at it objectively and apply that ratio. Now, as we've been stressing with you on record keeping, so you must maintain the records just in case you believe it's 90% of the time and is 90% of the expense that you need to claim. Once you have your records to show, then that is why you need to maintain the record, so that in the event that you're called upon to show proof that is really 90%, let me say how much your client, what was your client income was, and the income must match up to the thing. Well, not necessarily, because you can do the work and still not get to sell the house, right? But the point I'm trying to make is that you maintain good record keeping and you try your best, because we operate a self-assessed system. So you try your best to honestly and fairly find out what or allocate a ratio to the time you use it for the business and the time you use it for personal usage.
Thank you very much. Miss Allen just mentioned self-assessment. Therefore, there's an element of trust. So
That's
the government is trusting us to declare our income and expenses for the year. So, and as well, you have to be reasonable. So if it is 50% and you can prove that it's 50%, you can put it. If it is 90% and you can prove it, why not? Go ahead. So the principle is expenses incurred wholly and exclusively during the course of I'll go to another question.
Okay,
So,
the tax form, I was asked to repeat the tax form, the S04, S04 income tax return. This is the S04 return. I don't know if you can see it up there. Right. This is the one that you, as the realtor, you're required to complete. And remember, it must be done online. So you have to go to the tax portal and register, or you can, well, Corona is keeping, so we don't really encourage you to take the form into the office. You go to the web page and you register. And once you're ready, you create a username. When you create a username, you submit it for e-service registration, scan and upload your ID, and then you can give me a call to accept the request, and I'll accept it for you, right? Because the S04 and the S04A must be filed online this year, right? So you have to register with on the TAJ tax portal in order to do that. Now let me say that the deadline is March 15, just around the corner. And if you are late, the next day, $5,000 penalty is going to be added to your account, right? For filing late. And it's $5,000 per month. That is what the penalty is, and you don't want that to happen, right? Now I am going to what you can do also is, if you don't have all the records together, and I'm not saying this is what you must go do, I'm just saying, right? I am saying in the event that you don't, because some of you are new to this and you're just coming in and you're trying to get records together and all of that, know that you have all of this information. I am saying if you see March 15 come and you don't have everything together, you have the right to submit a nil return just to save yourself from the penalty, and then later to go on and to amend that return with the financial details, right? And you would require a letter of amendment to be attached to that return explaining why you have to amend the return. And you just put in the letter, you're amending it for financial details that weren't readily available to you on the 15th of March, right? Now, do not wait until the 15th of March when the poor little system overload and popping down. Please try to do things on time, all right? Try to get yourself in the return in before March 15 because anything can happen, all right? So register for e-services, call me, I'll accept it, and go on and submit the return. And if you need help, all 6 of us are here to assist you. Well, 7 of us will be here to assist you.
thank you very much. Another member was asking earlier, he started his practice or started in real estate business in 2019 and will be filing for the first time come March 15. How can he access waiver of penalties or in relation to the late filing? Well, just from knowledge, I don't know if it still remains. I think it depends on when you started, because from knowledge, I believe you have 18 months if you just start in business. Explain.
Not say so.
So I remember something about 18 months starting business.
Every year, we follow the calendar year, right? And
yes.
Every year, once you are a self-employed person, in fact, a return is required from everybody in Jamaica. You did know that? Everybody. But for some of us who are employed and the taxes are being deducted at source, the return is not required because your taxes are coming from where you work, your place of employment. But for those persons who are self-employed, even the little man you see outside selling Keynote and him little something, and him and not, a return is required of him, right? So, and it follows the calendar year. So every March 15, the return for the previous year is required of you. Now, for the person who will be filing 2019, which of course it's going to be late, and it will incur late filing penalties and interest, you have the option to apply for a waiver. You would address the letter to the technical specialist unit. You probably would want to write this down. The technical specialist unit, 12 Ocean Boulevard, the office center building, 10th floor, right? You don't go there to drop off the letter. You would submit the letter through the registry. at any of our revenue service centers, right? But you can apply for waiver if taxes are outstanding. Them going to throw it through the window, all right? So you have to wait until the taxes that you have outstanding, you have to clear off those, and then you submit the letter, the request to them for the waiver. Now they may give you some, and they may not give you none, and they may give you 10, or they may give you 30, or the good Lord may touch them and they waive all of it for you. But that will be dependent upon the merits of your reasons for submitting the return late that you would put in the letter. Now the letter must, there are some pointers that your letter must state, right? Why you end up filing it late, your inability to pay the penalty, to pay the money, the outstanding money, and yes, you're asking, requesting them for asking them to waive it for you, right? So those points must be in there. Your reasons for filing it late. What was the challenge? What happened? And I would say I just come into real estate. I didn't know what to do or how to go about it. I was not okay with the system, and or Corona come in to further, debilitate our efforts to go and do what we need to do. So I'm requesting a waiver, and I am unable to pay the money. That if that don't in there, you're not going to get it, right? Because if you can't pay it, they are glad to take your money, right? So I'm saying you have to put the tenant in the letter that would allow for them legislatively the right to give you the waiver. All right. So that is that in relation to the late filing penalties and interest waiver.
Thank you very much, Ms. Allen. Another member asked a question direct it to Atasha Bernard. You in your presentation, you made mention of the differences between recording expenses and in terms of recording the assets. What are the differences, so that persons can, as clearly as possible. I know it might sound simple to most people, but there are some clear rules.
Right, so thanks for that question. So when you think of money, there are two ways to look at it. Money coming in and money going out. So from a realtor's perspective, probably two of the main things for money going out would be you're paying expenses, or you're paying for, or you have purchased an asset. You could have loans, so you're probably paying on your liability. But the difference would be, for example, if you purchase a motor vehicle, that would be an asset, so it would not be classified as an expense. If you purchase a laptop, for example, to use to do your work, that would be an asset, which is written off via depreciation over a period, but for taxation purpose, you would claim capital allowance.
Thank you very much.
Right.
Yes. In the next section of your presentation, you're speaking about the fact that we should always ensure that Gct return and the income tax return actually correlate. Explain why. You gave an example, but if you can explain a little bit more on that, please.
Right, because just generally speaking, you will find that some persons, as Ms. Allen explained earlier, that when filing your taxes, you should be honest and fair. But you'll find that some persons, for GCT purpose, because they want to ensure that they claim all their GCT, they will ensure that they file all their income. But for income tax purposes, probably because they want to have a smaller tax liability, they use a lesser income. So what TAJ will do is that at the end of the year, when you file your income tax return, it will match your income tax income with your GCT income. So whenever there are variation, that is when you will expose yourself for a tax assessment.
That's a classic case of telling on yourself. No? So another member, I guess this question was directed to us, that as an association, we should lobby the Realtor Commission for purposes in Jamaica as a paid service. I agree. We will take that on board. What is the current minimum wage? This is directed to either Jeneva Allen or Atasha Bernard.
Oh, the minimum wage is
Or
$364,000.
Mr.
$364,000 per year. That's $7,000 per week.
Thank you very much.
So I would like to follow up on that because I saw a question in the chat where somebody was asking if there is a minimum income for salesman. So I guess the minimum income would be if you're below the income tax threshold, then you wouldn't necessarily have the income tax, but you still ought to file your taxes.
Okay.
Yes,
Thank
and
you.
I'd further like to add to that. I'd further like to add to that if even if the income is $0, you're still required to file. You're still required to declare to the commissioner that you earned nothing this year, right? Because failing to file and to tell the commissioner what your income position was, the commissioner who reserves the right empowered by the Revenue Administration Act to assess you based on the industry, right? So it is in your favor if you earn nothing to still make that declaration to say you did not earn anything. So it doesn't matter what the income level is. The fact that what the requirement is that you make a declaration. All right. And by making the declaration, that is filing your SO4 and your SO4A income tax return.
Thank you. Another member. You were saying something, Ms. Bernard?
Right. I would just like to add that somebody was asking if smartphone, telephone can be considered an asset. So the short answer would be yes, if it is that you use the phone to do your work.
Okay, thank you. Another member indicated that he heard us speaking about the current rates for transfer tax and stamp duty. However, he didn't hear any mention of registration fee. I think we did say it, but it is actually not 0.5%, and it's borne equally by the vendor and the purchaser, which is 0.25%.
Right. And just to add to that, just like stamp duty, it's the convention, and in most instances, the registration fees are split equally, but that's just it, a convention and a practice. But the parties can negotiate out of that and negotiate for one party to pay the registration fees and agree percentages. But in most instances, it's a 50-50 split. And again, I was also suggesting that in relation to registration fees, again, the Realtors Association did such a great job with the reduction over time of transfer tax and stamp duty. Maybe this is something that could be lobbied for as well, or at least certainly for very, very high net worth transactions. Or if you have a transaction that involves international lending agencies which have stamp duty waivers, maybe those waivers.
You're on mute.
I'm sorry.
Finish. You're through, Mr.
Yes, I'm all done. Thank you.
Oh, okay. So since you're on the floor as well, a member indicated that while the regular fees have gone down, they have noticed that probate fees have significantly increased from 3 to 5%, to 8% and more. Can you expound on that? I'm not aware of that.
I'll be frank with you, I'm not aware of that either. I'm not too sure what fees he's talking about. If he's speaking about legal fees of 8% to conduct a probate, I mean, again, I don't know the nature of the particular matter, but certainly that fee and that fee rate is one that is foreign to me, to have an 8% probate legal fee. As a matter of fact, I've never heard of a probate fee that high, but I think you'd have to look at that at a case-by-case basis. While we don't have fixed fees for probate or conveyancing, we tend to have standard fees on a standard range, but 8% or up to 8% or even 5% sounds extraordinarily, 8% sounds extraordinarily high for me. Unless what he's speaking about is, for instance, the land may have been sold and the lawyer charged 3% of the sale price, and then the lawyer charged 2% or 3% to assist with the probate. So 3 plus 3, 6%. So he might be talking about a cumulative charge amounting to 8%, but a flat fee of 8% for probate, in my experience, seems high. And so that's my own view.
I would like to make a point, and especially for 2020, which was a very abnormal year, you would have found that some persons are employed and also self-employed, so they have dual income. So they will still need to ensure that they file their taxes. You may have a situation as well that somebody maybe was fully employed and their employer was paying over all of their taxes. Let's say they were employed up to the end of April because COVID came mid-March. So the employer would have filed their taxes up to March. Let's say for another 4 months, they were not working, and then the latter part of the year, they probably now self-employed. They will still, even if it's for 1 month or 2 months, they still need to file their taxes. And what they will probably realize is that depending on their income, if their income is below the threshold, probably they would have overpaid their taxes and probably due for some tax refunds.
Thank you very much. What is the threshold currently? Ms. Bernard, what do you know from memory? The threshold?
1.5. Well, it's 1.5000 and some small dollars.
And just to add as well, those persons who are additional, who is employed, let's say full-time, and does real estate part-time, as Ms. Bernard just said, you'd have to file your taxes as a self-employed individual as well. And you would require, I think it's a P45 from your employer to finalize that return. All right. So, Mr. Walker, again, another question for you. What countries have double taxation treaty arrangements with Jamaica? They indicated US, UK, Canada. Any others? Like
yes.
any others?
In fact, in terms of double taxation treaties, and I don't want to call them double taxation treaties as opposed to revenue treaties. Jamaica has treaties with, I think, 15 different countries and regions. So for instance, I can just quickly list them: Canada, CARICOM, China, Denmark, France, Germany, Israel, Italy, Mexico, Norway, Spain, Sweden, Switzerland, United Kingdom, United States. Perhaps the most important ones for us would be our major trading partners: US, UK, Canada, and increasingly of more importance is China and France. So the people that I would say those would make up over 90% of double taxation issues, with the vast majority being US, UK, and Canada. I should point out that while I've listed CARICOM as a country, there are 6 countries in CARICOM, specifically with Jamaica, but they're all lumped together. So while it is a list of 15, it really is 20 when you break out the 6 CARICOM countries.
Thank you very much. Another question to Ms. Allen. Can you explain the recent tax credit to be applied on income? Ms. Allen, Jeneva Allen? Or...
Yes, I'm sorry, I'm multitasking. Sorry, could you repeat the question for me?
A member asked, can you explain the recent tax credit to be applied on income?
Tax credit, just there are no recent ones that were added to the credit list of credits. Just it remains to be the same: contractors levy, employment tax credit.
I believe they're speaking about the
minimum business tax was removed.
Ms. Allen, I believe that is referring to the 375,000. Is that the credit? That's the only
No, that is
one.
for companies. That is
right.
For,
it's only for
no,
companies.
no, that is for companies. Yes, that's not for individuals. What the companies, we are already, individuals are already getting what the company is now being given. The 375,000 is really the same $1.5,096 that we get as.
We have some buffering, some internet issues. You want to speak, Ms. Bernard, if you...
Right.
175,000 is the income tax credit that we get. So they have just leveled the playing field so that the same credit that individuals get, companies can get it as well, right? So we're already getting that as individuals. So there is really nothing new for the individual in terms of credit. There is something new for the company, but not for the individual. It's the same thing. Withholding tax on specified services are credit when they withhold the taxes from you. Contractors levy, employment tax credit. Minimum business tax was removed, so there is really no additional credits there for individuals.
Okay. So we'll be wrapping up shortly. However, there are a few more questions. Could you verify whether or not health insurance premiums can fall in the expense category? And if so, is it all or part of the premium?
Insurance premium in relation to the vehicle, or you mean your person?
Yeah, it says health insurance premium.
No, 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 not a deductible expense. No.
All right, thank you very much.
Remember, can I just say this? Remember, you have to keep in mind that deductible expenses refers to expenses that you would not have incurred except for the fact that you are doing the business. So the expenses that you incur just because you're trying to earn this income. Remember, life insurance or health is something that you would need to do whether or not you are doing the business, right? So that would not.
Health insurance.
Health insurance we're talking about now. So that would not be a deductible expense. But the insurance for the vehicle, that is a deductible expense, not health insurance.
So just being devil's advocate here.
Yeah.
I have decided to start real estate.
Yeah.
And as a realtor, my stress level has gone up. and it has caused me to go to visit the doctor a bit more often. Can't I say that my additional health expenses
But I
is
can't click.
directly attributable to
We can't increase my health insurance
the business?
because of the stress of Corona and get any incentive for that. So no.
What I'm saying, I guess it's all about what you can prove. But I accept your
That's why the word wholly in the income tax legislation says wholly and exclusively to earn the income. Wholly and exclusively. So there's no other way I could have earned this income without this, right? Right? So that is the thing that you need to keep in mind in determining whether or not this is in fact a deductible expense. Just remember them two things there. There's no way I could have made the money if I never have a vehicle. No way I could have made the money if I never have a phone. No way I could make the money if I didn't have a laptop. Yes, no way I could make the money if I didn't have internet and light to do what I need to do, right? So,
Miss Allen,
I
believe the question for...
Hold a second. I know I'm gonna make the money unless I had a whole and healthy body.
But you need a whole and healthy body to live. So you would need a whole and healthy body even if you weren't earning the income. You need a whole and healthy body.
Miss Bernard, you want to continue?
Sorry, Miss Bernard trying to say something.
I believe the health insurance question that Miss Allen responded to was directly in relation to the self-employed. But from a company's perspective, then it
totally different, right?
It would be an allowable expense for a company. Because it would be a part of the employee.
Right. Staff, right. But because we're talking to realtors, the individual realtors, that's the standpoint I answered the question from.
Right.
Yeah, Miss Allen, just a little bit information. Realtors are real estate brokers. Some of them own companies.
I know.
And have employees. So I guess
But in that instance, they would file for
the health insurance.
And they would still be required to file for themselves. So if there is a company that they have registered, then they would still be required to file for the company and to file for themselves. So when it is a limited company that they have registered or created, the business is separate from, there are two different entities, and therefore two returns will be required from that broker. The return for the company and the return for him or herself as a realtor, right?
Yes, for the return for the company in relation to the health insurance premiums paid for the employees.
It is a deductible expense. Yes.
Thank you very much.
Yes.
Someone also asked if can the car payments be included? I think I can answer that one. Well, if you realize for the car payments, there are two elements.
The payment of the loan is not a deductible expense.
Yes,
but the interest that you incur in paying back the loan itself is not a deductible expense. Because remember now, you claim capital allowance for the vehicle, right? And capital allowance, the purpose or the objective of capital allowance is to bring you back to recover, cause you to recover the full cost of the vehicle to you in purchasing it. So you claim capital allowance for that. But the loan that you're paying is not a deductible expense. The interest on the loan that you're paying is deductible.
And yeah, thank you very much. And of course, you still have to apportion the business portion as well.
You still have to apportion the interest. Yes, just like you would remember we said that the asset or capital that you share between yourself and the business, that you have to apportion those. So it go right down straight down to the split down into the middle, right? Right. Everything, it applies to everything that you share between yourself and the business.
And I think as it relates to vehicles again, for capital allowance, I think there are some special rules for capital allowance on vehicles. Are they? Miss Bernard and Miss Allen? Are there some special rules for capital allowance?
Right. I'm saying all asset capital is given a deemed life, and you can find the life that's on the website. So the phone have a deemed life, the computer have a deemed life, the motor vehicle have a deemed life, all assets all have a deemed life. The building, if for companies, have a deemed life, right? So you would write off every year a portion of that until you have recovered the total cost, not value, the total cost of the vehicle or the asset that you incurred, right?
Okay, thank you very much. I think I would say we're about there, close to the end of our seminar. I must chime in at this point to thank those who worked tirelessly in putting this presentation, this seminar together. That is our very own board member, Ms. Joan Latty, and the Secretariat, which is headed by Mrs. Otto. I appreciate their input here. So I couldn't leave the seminar without basically bigging up those Secretariat and Ms. Latty. I will introduce Ms. Latty now to do the vote of thanks for the moderators who have done an excellent job for this seminar.
Okay. Thank you. Thank you so much. Thank you so much, Oliver, for having done such a wonderful job. We'd like to thank our keynote presenters, Donovan, Atasha, and Jeneva. You have done an excellent job. And based on the feedback that I've had from my WhatsApp, our members have found it very insightful. Again, to our moderator, Oliver, we want to thank you so much for being here. To Nevin for the salesman's prayer. You have to send it out to us, Nevin, so we can use it all the time. Special thanks to Chancellor Insurance Agency for their cash donation towards this seminar. To First Heritage Credit Union for providing the gifts for our keynote presenters. Now I'm going to have to make my way to Donovan's office so I can give you your gift, Donovan, to say thanks again. And we will, of course, visit the TAJ to present Jeneva with her gift and to say thanks as well. We want to thank the RAJ staff, particularly Melissa, for her hard work and dedication, for just putting up with me and taking my calls all the time, hours of the night, and just doing it to make us feel very proud and special, as well as to the board secretary, Irene. Last but certainly not least, to thank our members for coming out today and participating. So again, I want to thank everyone for making this seminar really special. We had said that it was going to be great, and it was in fact great. So again, thank you all.
Bye, everyone. Miss Allen, it was great sharing the panel with you.
Bye.
Mr.
And same
Walker,
here.
Okay,
the
thank you
second
all.
time.
Bye-bye, Geneva. Goodbye, Tasha. Everybody stay safe. Bye now.
Bye, everyone, and thanks again.
Bye. Bye-bye.
Thank
Thank
you
you.
so much. Thanks again.
Bye.
Have a great day. Rest of the day. Bye-bye.